The United States Defense Department is a massive logistical machine, and keeping its internal infrastructure running requires heavy, continuous investment. To manage software and services across all its branches, the Pentagon just awarded a blanket purchase agreement worth an estimated $9.7 billion. The winner of that contract is Dell Federal Systems. But months before the government finalized this arrangement, the personal investment portfolio of the sitting president made a highly specific move. Mandatory disclosure forms reveal a purchase of somewhere between $1 million and $5 million in Dell Technology stock. If standard federal employees took official actions directly benefiting their personal financial interests, they would hit a wall. Conflict of interest laws strictly prohibit it. A regular civil servant caught in this scenario would face immediate legal consequences and be forced to sell off the overlapping financial holdings. The president, however, is completely exempt from those laws. He is not legally required to divest, allowing him to personally profit from the corporate contracts awarded by his own administration. The administration maintains that there is no ethical breach here. A White House spokeswoman stated simply, "There are no conflicts of interest." The Trump Organization argues that the president doesn't personally control his trading. Outside brokerage firms use an automated system to routinely buy and sell stocks on his behalf. This mimics a traditional blind trust, where independent managers completely block an official from knowing where their money is parked. But since his children manage the trust, the president can remain perfectly aware of exactly which companies he owns. Combine an awareness of your assets with total legal immunity from conflict of interest rules, and suddenly you end up with an executive branch where public policy and personal profit comfortably occupy the exact same room. To see how this legal gap functions in practice, we can map out the timeline leading up to the Pentagon's decision. In December, Dell Technologies founder Michael Dell made a major charitable commitment. He and his wife pledged $6.25 billion to launch the Trump Accounts program, designed to create tax-advantaged savings accounts for American children. 2 months later, in February, the president's portfolio executed that purchase of up to $5 million in Dell stock. Exactly 9 days after the stock purchase cleared, the president held a public event in Georgia. At the event, he praised Michael Dell and celebrated the family's massive December donation. He explicitly endorsed their hardware to the crowd, telling the audience directly, "Go out and buy a Dell computer." Fast forward to Wednesday. The Pentagon hands Dell Federal Systems a $9.7 billion agreement. Every single step operates within the legal bounds of the presidential exemption. But when a billionaire's charity, a sitting president's stock portfolio, and a massive federal contract all converge within a few months, the idea of an independent financial firewall falls apart entirely. The Dell timeline is a working blueprint for how business is done at the executive level. Financial disclosure forms show thousands of trades this year. The portfolio is actively moving capital into cryptocurrency, mining operations, and military drone manufacturing. These are the exact same sectors where the president directly oversees national policy and signs off on massive government purchasing decisions. Because there is no legal mandate requiring him to sell these holdings, this overlap dictates the permanent reality of the administration. As long as this structure remains, it is completely impossible for the public to know where a leader's personal profit ends and their actual policymaking begins.